Based on the historical data and forecast, Bitcoin exhibits an upward trend, consistently testing and breaching the resistance level of $66,700. The RSI values fluctuate around 50, indicating neither overbought nor oversold conditions recently. The Bollinger Bands show that the price is currently near the upper band, suggesting a potential for a temporary pullback, but the overall momentum remains bullish. Therefore, I recommend a long position strategy with an entry price of $64,600. The stop loss should be set at $64,000, just above the support level, to protect against a sudden downturn. The initial target price is $66,000, aligning with the forecast and recent resistance levels. To optimize returns, I propose a dynamic target price adjustment. If the price reaches $66,000, consider moving the stop loss to the entry price of $64,600, effectively turning the trade into a risk-free position. Furthermore, if the price continues to rise and breaks through $66,700, set a new target price of $67,000, capitalizing on the upward momentum. This strategy combines RSI, Bollinger Bands, and support/resistance levels to maximize potential profits while minimizing risk, aiming for high returns in a bullish market. Based on the historical data and forecast, Ethereum demonstrates a clear upward trend, supported by consistently breaking through the resistance level of $1,920. The RSI values fluctuate, but generally remain within a range suggesting neither extreme overbought nor oversold conditions. Considering the forecast prices, which predict a continued climb to $1,980, a bullish strategy is warranted. We will implement a strategy that combines RSI and Bollinger Band signals. When the price touches the bottom of the Bollinger Bands, which is around $1,500 to $1,510, we will enter a long position. The stop loss will be set just below the bottom band at $1,480, and the initial target price will be the upper band, around $1,880 to $1,910. To maximize potential returns, we'll employ a dynamic target strategy. Once the initial target is reached, we will move the stop loss to the entry price, securing profits while allowing the trade to continue if the upward momentum persists. The second target price will be set at $1,950, coinciding with a significant resistance level. If the price reaches $1,950, we will exit the position. If the forecast holds true and the price reaches $1,980, we will adjust the target price accordingly. This combined strategy, utilizing RSI, Bollinger Bands, and support/resistance levels, aims to capitalize on the prevailing bullish trend while mitigating risk through strategic stop-loss placements and dynamic target adjustments. Based on the historical data and forecast, BNB exhibits a slightly downward trend with considerable price fluctuations. The RSI consistently remains between 44 and 52, indicating neither strong overbought nor oversold conditions. The Bollinger Bands show that the price has been fluctuating within the bands, with the lower band consistently around 540 to 550 and the upper band around 590 to 600. Given the current RSI near the midpoint and the forecast predicting a slight decline to $566, I recommend a moderately conservative strategy. We will initiate a short position at $572 with a stop loss placed at $573 to protect against unexpected upward movements. The target price for this short position will be $566, aiming to capitalize on the forecasted decline. To refine this strategy, we will incorporate RSI-based entry and exit signals. If the RSI dips below 40, signaling an oversold condition, we will enter a long position at $566. The stop loss will be set at $565, and the target price will be $571. Conversely, if the RSI rises above 60, indicating an overbought condition, we will enter a short position at $571, with a stop loss at $573 and a target price of $567. This blended approach, combining the forecast with RSI signals and Bollinger Bands observations, provides a balanced portfolio aiming for consistent, albeit moderate, returns. Based on the historical data and forecast, XRP has been trading within a narrow range between $1.09 and $1.11 for the past 2 weeks, indicating a sideways trend. The RSI fluctuates around the 45 to 50 level, suggesting neither overbought nor oversold conditions. The Bollinger Bands have been relatively tight, further confirming the lack of strong directional movement. The forecast for the next week predicts a slight upward trend, with prices potentially reaching $1.13. Considering these factors, I recommend a moderately bullish strategy. We will implement an RSI-based strategy with a focus on short-term gains. My recommended strategy is to enter a long position at $1.09 when the RSI drops below 40, which indicates an oversold condition. The stop loss should be set at $1.07 to limit potential losses if the price declines further. The target price for this trade is $1.13, aligning with the forecast and the upper resistance level. This strategy aims to capitalize on the predicted upward movement while mitigating risk with a conservative stop loss. The portfolio will be 60% RSI based, 20% Bollinger Bands based, and 20% support and resistance based to ensure the most efficient investment. Based on the historical data and forecast, Solana shows a generally upward trend, although with some volatility. The support price has remained consistently at $77.8, while the resistance price is $82.4. The RSI values have fluctuated between 46.5 and 60.7, indicating periods of both oversold and overbought conditions. The Bollinger Bands have widened and narrowed, suggesting periods of increased and decreased volatility. Considering these factors, I propose a combined strategy using RSI and Bollinger Bands. First, I recommend a long position when the RSI dips below 20, with an entry price of $73.3. Place a stop-loss order at $71.6 to protect against a potential downward reversal. Set a target price of $80.7, aiming to capture the upward trend. Subsequently, when the RSI reaches 80, consider taking profit at $80.7. If the price touches the lower Bollinger Band, which is currently at $73.3, enter a long position with a stop-loss at $71.6 and a target price of $79.5. This combined approach leverages the strengths of both indicators to maximize potential returns while managing risk effectively. Based on the historical data and forecast, TRON has shown a slight upward trend, fluctuating within the support of $0.323 and resistance of $0.332. The RSI has generally remained below 80, indicating that the asset is not currently overbought, but has been close to oversold territory recently. The Bollinger Bands suggest periods of volatility, with prices occasionally touching the upper and lower bands. Considering this, I recommend a moderately bullish strategy. We'll enter a long position when the RSI falls below 45, indicating an oversold condition. Specifically, enter a long position at $0.323. Place a stop-loss order slightly below the lower Bollinger Band at $0.314 to protect against unexpected downturns. Set a target price at the resistance level of $0.332, aiming to capture the potential upside within the established range. To enhance the strategy, we can adjust the position based on the Bollinger Bands. If the price approaches the upper band, consider taking partial profits to secure gains. If the price touches the lower band and the RSI confirms an oversold condition, then enter a long position at $0.323 with a stop-loss at $0.314 and a target price of $0.332. Given the forecast of prices remaining relatively stable around $0.327 to $0.329, a conservative approach is warranted. This strategy balances potential gains with risk management, aligning with a high returns investment approach. Based on the historical data and forecast, Dogecoin shows a slight downtrend with a forecast price decreasing from $0.0712 to $0.0701. The RSI consistently remains below 50, fluctuating between 31.3 and 42.1, indicating a generally weak momentum. Considering the Bollinger Bands, the price has been oscillating within the bands, with the lower band consistently around $0.0701. Therefore, I recommend a short position strategy. Enter a short position at $0.0741, placing a stop-loss order at $0.0778, just above the upper Bollinger Band. For the target price, aim for $0.0698, aligning with the forecast price and the lower Bollinger Band. To refine the strategy, I'll incorporate the RSI. If the RSI drops below 30, which indicates an oversold condition, consider covering the short position to avoid further losses. Conversely, if the RSI rises above 70, indicating an overbought condition, it might signal a potential reversal. However, given the current downtrend and forecast, maintaining the short position with the specified entry, stop loss, and target prices is the most efficient approach to capitalize on the anticipated price decrease. This strategy balances the risk of a potential rebound with the probability of a continued downward trend. Based on the historical data and forecast, Zcash shows an overall upward trend, consistently bouncing off the support price of $526. The RSI values fluctuate between 53.0 and 65.4, indicating periods of both oversold and overbought conditions. The Bollinger Bands have been widening, suggesting increasing volatility. Considering the forecast for the next week, the price is expected to hover around $557 to $563, with a slight upward bias. Therefore, I propose a long position strategy with an entry price of $547. A stop loss should be placed at $526, aligning with the established support level, to limit potential losses. The initial target price should be set at $563, based on the forecast high, providing a reasonable profit margin. To refine this strategy, we can incorporate RSI signals. If the price dips and the RSI falls below 20, it signals an oversold condition, providing a potential entry point. Conversely, if the price rises and the RSI exceeds 80, it suggests an overbought condition, indicating a possible exit or short-term profit-taking opportunity. The Bollinger Bands can also inform our decisions. When the price touches the lower band, it might indicate a potential buying opportunity, while touching the upper band could suggest a selling opportunity. Combining these indicators, a dynamic position management approach is recommended, adjusting the stop-loss and target prices based on real-time price action and RSI/Bollinger Band signals to maximize returns while managing risk effectively. Based on the historical data and forecast, Stellar has been fluctuating within a narrow range between $0.181 and $0.189. The RSI consistently hovers around the mid-range, indicating a lack of strong directional momentum. The Bollinger Bands show that the price has been oscillating near the lower band, suggesting potential for a rebound. Considering these factors, I recommend a moderately bullish strategy. We will enter a long position when the price touches the support level of $0.181. The stop loss should be set slightly below the support at $0.179 to protect against a potential breakdown. The initial target price will be the resistance level of $0.189, providing a reasonable profit margin. To refine this strategy, we will incorporate the Bollinger Bands. If the price approaches the lower band and the RSI is above 30, it strengthens the likelihood of a bounce. If the forecast indicates a price above $0.184, it further reinforces the bullish outlook. Therefore, we will enter a long position at $0.181, set a stop loss at $0.179, and target $0.189. If the price reaches the target, we will consider moving the stop loss to break even to secure profits and potentially ride further upward momentum. This combined approach leverages both RSI and Bollinger Bands for a more robust and adaptive trading strategy. Based on the historical data and forecast, Chainlink shows an upward trend with consistent support at $8.34. The RSI values have been fluctuating but generally trending upwards, indicating increasing buying pressure. The Bollinger Bands have been widening, suggesting increased volatility and a potential for further price movement. Considering the forecast price, which projects a steady increase to $8.93, I recommend a long position. The entry price should be $8.49, coinciding with the first day of the forecast period. A stop loss should be set at $8.34, just below the established support level, to mitigate potential losses. The initial target price should be $8.81, aligning with the forecast price for July 25, 2026. To optimize returns, I propose a dynamic strategy adjusting the target price based on the RSI and Bollinger Bands. If the RSI reaches 80, consider taking partial profits and tightening the stop loss to $8.58. If the price breaks above the upper Bollinger Band, consider raising the target price to $9.14, the resistance level. This combined approach leverages both technical indicators and the forecast data to maximize potential gains while minimizing risk. The final target price will be $8.93 with a stop loss of $8.34. Based on the historical data and forecast, Raydium exhibits an overall upward trend, supported by the increasing forecast prices. The RSI consistently remains above 50, indicating a bullish momentum. Considering the forecast for July 27, 2026, at $0.753, and the recent price action near the support level of $0.697, I recommend a long position. Enter a long position at $0.685. Placing a stop-loss order at $0.674 to limit potential losses. The initial target price should be $0.71, coinciding with the recent resistance level. To further refine the strategy, incorporate the Bollinger Bands. The price has been fluctuating within the bands, suggesting potential for upward movement. If the price breaks above the upper Bollinger Band, consider raising the target price to $0.736. Based on the forecast for July 26, 2026. Conversely, if the price touches the lower Bollinger Band, it might be a good opportunity to buy. This layered approach, combining RSI and Bollinger Bands, provides a robust investment strategy with clear entry, stop loss, and target levels, aiming for high returns while managing risk effectively. Based on the historical data and forecast, Maple Finance shows a generally upward trend with some volatility. The RSI consistently stays above 50, indicating bullish momentum, but occasionally approaching overbought territory. The Bollinger Bands show that the price has been fluctuating within the bands, suggesting periods of consolidation and expansion. Considering the support price of $0.178 and the forecast prices trending upwards, I recommend a long position. Our entry price will be $0.188. The stop loss will be set just below the support level at $0.177 to mitigate potential losses if the trend reverses. The initial target price will be $0.198, aligning with the forecast high and the upper Bollinger Band. To refine this strategy, we'll incorporate RSI and Bollinger Band signals. If the RSI dips below 30, indicating an oversold condition, we'll consider adding to our position at $0.177, with a stop loss at $0.175 and a target price of $0.203. Conversely, if the RSI exceeds 75, suggesting an overbought scenario, we'll consider taking profits at $0.198 or tightening our stop loss to $0.188. This dynamic approach, combining trend analysis, support and resistance levels, and technical indicators, aims to maximize returns while managing risk effectively. Based on the historical data and forecast, Injective exhibits an overall upward trend, with price fluctuations within a range of $4.5 to $5.59. The RSI values fluctuate between 45 and 60, indicating periods of both oversold and overbought conditions. The Bollinger Bands show periods of contraction and expansion, suggesting volatility. Considering these factors, I propose a combined strategy utilizing RSI and Bollinger Bands. Initially, I would enter a long position at $5.17 when the forecast price begins on July 21, 2026. A stop-loss order would be placed at $4.8, just below the lower Bollinger Band, to mitigate potential losses if the price reverses. The target price would be set at $5.45, aligning with the upper end of the forecast range and the upper Bollinger Band. To refine the strategy, I will incorporate RSI levels. If the RSI drops below 30, indicating an oversold condition, I would consider adding to the position at $5.15. Conversely, if the RSI rises above 70, suggesting an overbought condition, I would consider taking partial profits at $5.32. The primary long position remains at $5.17 with a stop loss at $4.8 and a target price of $5.45. This combined approach leverages both momentum and volatility indicators to maximize potential returns while managing risk effectively. Based on the historical data and forecast, just shows a clear upward trend. The RSI consistently remains above 60, indicating bullish momentum, with values nearing 80 on several days, suggesting a potential overbought condition. The forecast prices project a continued rise, reaching $0.111. Combining these signals, I recommend a long position strategy. The entry price should be set at $0.103, coinciding with the first forecast price. A stop-loss order should be placed at $0.097, slightly below the recent low and the lower Bollinger Band, to protect against potential downside risks. The target price for this trade is $0.111, aligning with the final forecast price and offering a significant potential return. To refine this strategy, we can incorporate the Bollinger Bands. If the price touches the upper band, consider taking partial profits. The RSI indicates that the asset is approaching overbought territory, suggesting a possible pullback. Therefore, a conservative approach would involve scaling out of the position as the price approaches $0.108, securing a substantial profit while mitigating potential losses from a reversal. This combined RSI and Bollinger Band strategy offers a balanced approach, capitalizing on the upward trend while managing risk effectively. Based on the historical data and forecast, Worldcoin shows a decreasing trend with consistent support at $0.281 and resistance around $0.382. The RSI fluctuates between 38.5 and 47.0, indicating periods of both oversold and overbought conditions. The Bollinger Bands have been narrowing recently, suggesting decreasing volatility. Given the forecast of declining prices between $0.374 and $0.357, a short position strategy is recommended. We will enter a short position at $0.374, placing a stop-loss at $0.38 to protect against unexpected upward movements. The initial target price will be $0.36, based on the forecast, but we will adjust it based on subsequent price action. To refine the strategy, we will integrate the RSI and Bollinger Band signals. When the RSI falls below 30, indicating an oversold condition, we will consider covering our short position partially. Conversely, when the price touches the lower band of the Bollinger Bands, it could signal a potential bounce, prompting a partial covering of the short position. The portfolio will prioritize the short position strategy with adjustments based on RSI and Bollinger Bands. For instance, if the price falls to $0.36, we will take 50% of our profit. If the RSI reaches 60, we will cover 50% of our short position. This dynamic approach aims to maximize returns while managing risk effectively. Based on the historical data and forecast, plasma has been in a downtrend with consistent lower highs and lower lows. The support price remains consistently at $0.0804, while the resistance fluctuates but has not been convincingly broken. The RSI has been consistently below 50, indicating a bearish momentum, and has even dipped into oversold territory, reaching a low of 39.6. The Bollinger Bands show that the price has been trading within a contracting range, with the lower band consistently providing support. Looking at the forecast for the next week, the price is expected to continue its downward trend, hovering around $0.084. Therefore, a short selling strategy is recommended. The strategy involves entering a short position when the RSI falls below 40, indicating an oversold condition. For example, when the RSI was 39.6 on July 17, 2026, enter a short position at $0.0849. Set a stop-loss slightly above the recent high, around $0.0889. The initial target price should be the support level of $0.0804. If the price reaches the support level, consider taking partial profits and moving the stop-loss to break even. If the price continues to decline, a secondary target price can be set at $0.0765, which is the bottom of the Bollinger Bands on July 14, 2026. This combined strategy utilizes both RSI and Bollinger Bands to maximize potential returns while managing risk effectively. Based on the historical data and forecast, KAITO demonstrates a clear upward trend. The price has consistently broken through resistance levels, and the forecast indicates continued growth. The RSI consistently stays above 60, suggesting strong momentum. We will implement a combined strategy utilizing RSI and Bollinger Bands. The RSI is above 70 on July 20, 2026, indicating an overbought condition. Therefore, we will initiate a short position at $1.07 with a stop loss at $0.991, just above the forecast price for July 26, 2026. Our target price will be $0.972, aligning with the forecast for July 25, 2026. However, the Bollinger Bands show that the price is nearing the upper band, suggesting a potential pullback. To mitigate risk, we will implement a partial profit-taking strategy. If the price reaches $1.05, we will close half of our position and move the stop loss to $1. This allows us to capitalize on the upward trend while protecting against a sudden reversal. The support price of $0.624 provides a further safety net, although this is far below our entry and stop loss prices. This combined RSI and Bollinger Bands strategy aims to maximize returns while managing risk effectively in the current market conditions. Based on the historical data and forecast, Lido DAO exhibits an overall upward trend. The RSI consistently fluctuates above 50, indicating bullish momentum, with recent values nearing 80, suggesting a potential overbought condition. The forecast prices for the next week project continued increases, reaching $0.395. The support level at $0.372 and the resistance at $0.414 provide key price boundaries. Considering these factors, I recommend a long position with an entry price of $0.373 on July 21, 2026. A stop loss should be set just below the support level at $0.368 to mitigate potential losses if the price reverses. The target price for this trade is set at $0.395, aligning with the forecast price for July 27, 2026. This strategy combines the upward trend, positive RSI, and bullish forecast. The Bollinger Bands also support this decision, as the price has been consistently trading above the lower band, indicating upward momentum. I anticipate a high return on this investment, capitalizing on the projected price increase while managing risk with a carefully placed stop loss. This portfolio is the most efficient of the three strategies. Based on the historical data and forecast, Jito shows a downtrend with increased volatility. The RSI consistently remains below the 50 mark, indicating a weakening momentum. The forecast for the next week projects a continuation of this downward trend. Considering these factors, I recommend a short position strategy. The entry price should be set at $0.615. To manage risk, place a stop loss order at $0.646, just above the recent resistance level. For the target price, aim for $0.549, aligning with the historical support level. To enhance the strategy, integrate Bollinger Band signals. If the price touches the lower band, it suggests an oversold condition, which might be a potential entry point. However, given the overall downtrend, I prioritize the RSI and trend analysis. Therefore, the primary strategy is a short position with an entry price of $0.615, a stop loss at $0.646, and a target price of $0.549. This approach balances risk management and potential profit. Based on the historical data and forecast, Bonk has been in a downtrend recently, with decreasing prices and an RSI consistently below 50. The forecast for the next week suggests a continuation of this downward trend, with prices expected to reach $0.0000260. The support price of $0.0000280 has been consistently holding, and the RSI is approaching oversold territory, currently at $24.8. Considering these factors, I recommend a short position strategy. We will enter a short position at $0.0000320. The stop loss will be set at $0.0000280, just above the support level, to limit potential losses if the price unexpectedly rebounds. The target price will be $0.0000260, aligning with the forecast and providing a reasonable profit margin. To further refine this strategy, we'll incorporate the Bollinger Bands. The price is currently near the lower band, suggesting a potential for a bounce, but the overall trend is bearish. Therefore, the short position remains the most suitable approach. This strategy combines technical indicators and forecast data to maximize potential returns while managing risk. The RSI confirms the bearish sentiment, the Bollinger Bands indicate a possible short-term bounce, and the forecast supports the downward trend. This combined approach provides a robust and well-informed investment decision.